The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome all to another excellent edition of the Power Trading Hour. It is a Tuesday, and what should we start seeing now? It's almost the end of August. We should start seeing volume. And, we've got some movement, a little better volume today, 2 billion shares. We should see a lot of the traders ending up their vacations in the Hamptons. Those with kids come back generally a little earlier because, of course, of school. But a lot of these guys are in their 60s. Their kids are already out the door. They've got their million-dollar mansions out there in Hamptons, and they're going to get use of them. And who could be so inconsiderate as to gas their own people and force them back early? But President Assad, just a mere imitator of his previous self, of his dad. His dad was, much better at pulling out fingernails than I'm sure the son ever will be. But, I guess the son has gone to the full-scale manufacturing route and just decided to gas them all. And we're going to see this kind of movement for a while. I said in my newsletter this morning, just sit back, don't pay attention to any of the charts. Normally, you get a few things happening when the specter of war starts to come out. We've seen it 2-3 times, at least in my lifetime, during intimate military action, and that is the market does not like not knowing what's going on. In the first Gulf War, as soon as the first bombs started to hit, the market started to rally. The same thing in the second Gulf War, to a lesser extent, and I think that this one will be even to a lesser extent as far as the pullback caused just by the war. But, basically when everybody knew you were going to war, to the time the first bomb dropped, the markets just couldn't catch a bid. And I think we're probably going to see that today. If you believe the reports on television, we are going to see the first bombs drop on Thursday. So I would not be hanging out trying to think we're going to reach a low and this market's going to start rally. And we can look at technical points for support, but that support normally is transitory. Normally when you do get into the kinds of words that are being bandied about by 3 nuclear powers, Russia, China, and the United States, it just doesn't end up very well. Of course, crude rallying on the thought that maybe this will. Well, thank you, Little Vixen. Little Vix is feeling very good because the Vix is higher today, and she may, from time to time, chirp in every time she sees the Little Vix go higher, because maybe I'll even say her announcement. Yes, I would. I would say that we were interrupted for a Spot announcement. Thank you, Spot. But I didn't call her Spot. But Vixen, a great name for her. Anyway, if anything is pretty much a pattern, it is the selling until the first bomb drops, at least in the United States stock market. Pretty much 3 times. I remember it very plainly in the first Gulf War. The reason why is it was all getting fired up, and the company I was working for at the time needed to get equipment to Kuwait. They bought a very expensive ticket for me on the Concorde and a seat next to me where we had basically a full uplink, video uplink system that was going to CNN. And so I took a flight from Cincinnati to New York, got on the Concorde, got off 3 hours and something hours later in the UK, took a flight directly to Saudi Arabia, got in a Humvee and was motored as quickly as possible up to the Kuwait border and handed over the equipment. They set it up, and that was it. But basically, it was two big Zero Halliburton cases, one with the electronics, one with a foldable dish antenna, and a great deal of what you saw came off of that. Of course, they didn't fly me back on the Concorde. That was one of 2 times I got to fly on it. But at that time, I always thought it was weird. There was no bulkhead behind the pilots. I could look right at the back of the head of the pilot up in the front. And now some people tell me that they've been on other Concordes and that wasn't the way it was. But I always thought it was weird. They were so worried about weight that was a problem. And they didn't even bother putting the bulkhead in. But I like the champagne and cheese. You about get a chance to drink it by the time your flight's over. Very neat. Of course, more like a roller coaster ride than anything up. And just you basically go up for 30 minutes, fly for a couple hours, and then you do the lawn dart right back down to the ground. Kind of interesting. But anyway, I remember those bombs dropping because I had just gotten back into Cincinnati, probably about 10 o'clock at night. Was just throwing I'm pretty sure I was just throwing my bags on the bed at the hotel. And what happened? Turned on the TV, and there it was. The bombs were starting to drop, at least the way I remember it. I won't let the facts stand in the way of a good story. But each time I did notice that the market back in 92, I think it was 92, wasn't it? And, just the market doesn't like the unknown. As soon as it has a known, i.e. the war has started, or a war has started, the market normally likes to start running again. But I wouldn't be trying to catch any bid or catch a bottom. I would have my finger on the button to go ahead and cover my shorts as soon as that happens and you see any kind of sign of strength. Of course, we've got bigger issues out here, and maybe we get a 20 or 30 point bounce wherever this thing decides to bounce to a bottom. But I think we've got bigger issues coming for us, and this is just one of many things. And again, we have a spot announcement. I don't know why, but she's particularly vocal today. Probably because I just got back and wasn't playing with her for an hour or two. And the Diablo, the other trading dog, you've never heard him because he's incredibly quiet. He only barks at other dogs that he doesn't know. Anyway, what else do we have going on in the marketplace? Well, the first thing we want to do is keep a very close eye on the volume as we come down again. Closing out on 2.1 billion shares, much stronger than what we saw yesterday. And, of course, Tuesday, we should see this volume pretty much pick up every day but Friday into the next 2 weeks. And, we're pretty much at that level that we saw just a little after a couple weeks ago. That's the 1633. I suspect it will be a short amount of support. If it gets ugly by the end of the day, I'm looking for decent support really to come in at 1620 on the S&P cash. So what else do we have? Gold and silver selling a little. What else do we have? Well, of course, everybody's a little bit worried out here. Gold was a little higher, but it is $22.40 higher now on the current contract. That is on the Z contract, which is $14.15.30. We've got silver up 53 cents at $24.53. Platinum off $22. Doesn't seem like that's a storehouse of value today. Of course, crude up $3. We've been talking a lot, and I wanted to get to this because we've been talking about confluence levels, and especially Apple, as an example for you to learn the confluence levels. Let me go ahead and bring up a chart here real quick. And This thing went right back up to the gap, but also went right back to a very nice level of support or of resistance in the confluence zones. And I've been showing this. If you're new to the show, confluence is where two different levels of Fibonacci retracements, the largest one, which is the 618, and the smallest one of the larger Fibonacci movement, come and form an agreement that's very narrow. In this case, it was about $7 on Apple. It went from 507.33 up to 514.86. And, of course, we came within about 75 cents of the top of that on August 19th, and that indeed was the high on this. It's come back to fill the gap. That gap, it did have nice volume out here, but we are back at 490, probably going to pull back a little bit farther, I suspect. We could probably be back in the 465 range if we continue to see the war drums beat, but no bombs or missiles flying. So we'll take a look at that. Okay, what else do we have going on in this market? Go back and take a look. Gold rose. See what else we have in here. DTV, RBS, weakness, RO, UBNT. And see. Just seeing if there was anything out here that was really exciting. Sienna had a upgrade, but it didn't look like it did it a lot of good today. And it's not. This is another one that took off with a giant volume. And I think we're probably good idea that this is coming back to about 1750. Like a lot of these other stocks, this thing took off with volume that has never been tested. That was on June 6th, where it bounced up on 24 million shares. That gap has never been filled. Of course, you continue. What you really like, if you're bullish, is at least a pull back into that gap. It at least maybe goes about halfway into it. The volume really dries up, and then the stock turns around and starts heading higher. That you didn't get any of that gap tested. 24 million shares. That's more likely when support's going to come along. But at this point, Sienna, C-I-E-N, is likely to come back into this gap, which is about $18. See if what else is going. In foreign markets, we had the FTSE off 0.8. Germany was off 2.3. France was off 2.4. Spain was off 3%. Portugal off 1.9. Italy 2.3. And the Irish, who probably weren't fighting too hard because it was down 2%. Greece was off 4%. And see if I can actually pull up what we have going on here. We're going to break. We'll be back in a minute, but we're going to be looking at markets that normally people don't look at over there in Asia to see just how weak they were overnight. Be back in a minute.
Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. TFNN has just announced our first ever virtual trading competition, and we're giving away $10,000 in cash prizes, and it's free to enter. Sign up by Thursday, September 5th at noon Eastern, and the trading competition will take place the following week, Monday, September 9th, with first place winning $3,000. Don't delay, as you won't be able to register once the competition begins. Sign up now and reserve your spot in TFNN's $10,000 virtual trading competition. To sign up and for all the details, log on to TFNN.com. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And of course, when you get activity like we have now, you also get a lot of movement in tertiary markets. I'll call them that. But you get Dubai. Its stock market there was down 7% overnight. Of course, Saudi Arabia was down 3.5%. Of course, these markets not very large, but boy, 7% move in one day gives you an idea. And of course, India, Indonesia, Turkey are all getting crushed too. And not a big surprise that we've got the Fed just trying to slow down the pullback here in the United States, but I suspect that's what we have. Again, my thesis is that they know that the market has to come back. It's all about how slowly they can let it come back and how slowly they can let the air out of the balloon that they created not too long ago by lots of virtual money, actually. Speaking of virtual, we're going to the virtual trading competition, and everybody has the opportunity to sign up before the 5th of September. And, of course, we're going to be giving away cash prizes totaling over actually, not over, but $10,000. And, of course, we'll have 20 winners and 25 daily winners. We'll be giving away 35 cash prizes that range from $100 to $3,000. We'll also be giving away 35 copies of Tom's book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, that I basically wrote a program to go along with, The Art of Timing the Trade Charts. So make sure you sign up for that, and it's going to be pretty neat. Yeah, going to be the ability to make some extra cash with no downside. Many times you can't trade out there without a risk. This is one of them. No risk. Just if you win, you're going to make some folding green, or maybe get a prize out here. So we continue to look at this market. I'm just keeping a close eye. Of course, one of the things of being a trader and being on the radio at the same time is keeping a close eye on these markets. Continue to start hitting these lows. Again, if you missed the previous segment out here, see if I can find it. I'm looking for a close somewhere around 1620 on the S&P cash. That's the first area where we're going to probably see any kind of a meaningful bounce and support level. But again, going back and looking in history, it is a rolling auction normally until the bombs start to fall. And some people call it a patriotic rally, i.e. that it's that when there's blood in the streets, it's time to buy. Others people believe that it's just the right thing to do to support the market. I don't know. I've never felt like that. The market never gave me any money when things were feeling patriotic or unpatriotic. I think it's more of an issue that this is our business and we're here to make money. But no wartime profiteering. But of course, I don't think anybody listening to this show is at the scale of a icon that can really go and move markets and do something like that. But we are down to 1631.78, 2.2 billion shares. The volume is rolling. If we saw anything like 4 to 4.5 billion shares today, I would suspect that we've blown through a lot of the support. Like I said, I'm looking at the 1620 level as the first level of support. If that breaks, then we're back down to probably 1596 for minor and 1575 for mediocre support. And again, the longer this thing goes on, probably the longer the sell-off will continue. I would not put a lot of weight in being able to catch one of these lows out here. And it's, of course, even if you look just historically, how bad Septembers are for trading. They are statistically the worst month to go long. Normally, you get rid of your losers in that part of the month if you're a hedge or a big fund, and you get ready to start pushing the market in October, November, and December. So there is a bias to the downside at this time of the year, and for probably about the next 40 days, something like that. We will be back in a moment. Make sure to give me a call at 877-927-6648. That's 877-927-6648. I'd appreciate your call today.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
We're rolling with the Owlmeister, as he wants to be called, in the engineering room, and I'm heard that there will be no more disco the rest of the show. So hopefully we hold to that agreement. A.O. Smith, we've been looking at some of these stocks, and again, I think that markets is going to continue to sell off until we actually have the war started, or bombs flying, or whatever it's called, the armed conflict. But we've got a few stocks that have made very good signals that they haven't made a top. We've seen the entire housing market pretty much do that. Some of the stocks surrounding it, carpet companies, that kind of stuff, have been doing a little bit better. A.O. Smith, the maker of water heaters, been doing very well. But it did go and test its previous high of July 24th that had $43.54 as its high. 1.8 million shares came into it with a fourth of that yesterday on August 26th, and headed down pretty much right off the bat with that. So been looking pretty good on that. Now, what else do we have? I'm going to just go through some of these that have, are looking fairly good and talk about them. We've got BH, not a lot in that one. BOCO, BLP, Ballard Power, Ballard. We'll find a couple other ones here. We've got a lot of stocks. Here's another one, Central Fund of Canada. Kind of interesting today. Of course, this is the gold fund out here. This thing is, pretty much following the pattern that we've seen out before in these markets. Really looks like, of course, in this gold market, that you could consider this possibly a Gartley pattern. But I see what's wrong with it there. But the next stop up here would be at this gap at 1740. Of course, we don't recommend at TFNN that you actually trade that CEF, but it is one out here. But I think what we have here today is a couple of dojis. We could get one more, but this thing has a nice gap at about 1740, and might be looking for gold to have at least a short-term top in that if you're trying to play that off. Let's see what else we have. Well, we've been watching Cree, and of course, there's nothing worse than being in a market that you blow out the previous low. This certainly looks like it's going to come back and finish its gap fill, which is down around just a little over 45. That gap came up on March 5th with 13.3 million shares. And we're kind of working our way back down here today. 2.2 million shares already. The first part of that gap fill will come at $48.40. They did come back and test it, which is what you're looking for, that we didn't see in that previous chart. So, you had 13.3 million shares, came back, tested that on April 3rd with just under 5 million shares. It had a nice big ABC all the way, actually two, ABCD all the way up to $76, where the wheels fell off of it. And it's probably going to make its way back down there. It's got about another $5 down, a little more than $5, back to that April 3rd low. May even find a little bit more into that gap down to, that's a fairly large gap. That's what, $3.40, $3.50, something like that. So keep an eye on that. It is going to be a fairly extensive gap fill on this fairly quickly, but probably first finding support at 48.40. So if you're interested in this stock, playing it back again, I'm not real bullish on it, but you probably want to be waiting at 48.50 back on some of those. Cirrus Logic, another one of these, the same kind of thing. We're seeing a fairly significant amount of stocks in this pattern that blew out down on high volume. CRUS is the symbol for Cirrus Logic. Came down on monstrous volume on the 23rd of May. That volume was almost 25 million shares. We got into it with a doji yesterday. This thing has retraced right back. One of the things you really have to dislike about this chart is the high volume July 16th low with 8.1 million shares that has not been retested. That would say you probably got a good chance that this thing is going to race back to that July 26th low, which, 45 days ago, not a big deal. Let's see what else we have to look at here. Cruise, Cousin Properties, Drawing Properties. Now, one of the things that people say is that on a market pullback, you want to be buying the vices, liquor and tobacco. Kind of interesting that you actually got a nice rally and gap up, and it is Diageo, DEO is actually coming back and filling that. And not a bad-looking doji out here if we had the chart right out here. If you must go long, this would be kind of an interesting play at 123.94 for the low so far today. We've got to be Got to be looking. It's probably somewhere in that area. Yeah, you've got previous highs at 127.51 on April 3rd, 126.29 on May 14th, and we're probably at the bottom of that. But if there are going to be some stocks rallying out of this before the bombs start falling, we might want to look at that. I'm pretty sure they are the largest distributor of wine and spirits. We're going to Ron in Denver. How you doing today, Ron?
Morning, David. How you doing, sir?
Another day in paradise.
I was wondering if you look at London liquidators, and the reason I was looking at it for puts because of Home Depot fell out of bed about a week and a half ago.
Yeah, even these, like I was just saying, the A.O. Smith. Did you catch that part when I went through that one?
No, I was late in hearing you. I'm sorry.
Okay, you probably want to go back to the beginning of the show, but A.O. Smith.
What's the symbol on A.O. Smith?
AOS.
AOS? Okay.
Yeah. If you look at that one, I'll do this one first, just repeat it real quick. So if we have anything in the conversation that comes up. The July 24th high was a 43.54. Of course, they make water heaters for new housing. 43.54, 1.8 million shares. Got into it yesterday with 560,000 shares, and it's rolled back into the trading range out here. So kind of interesting. Lumber liquidators, of course, the flooring manufacturer. This has been the strongest sector, I think, in any of the markets I've seen, which has been Buffett's company, which makes carpeting. What is that? Is it Mohican carpet? What is it?
I don't. No, I do not.
I thought it was okay. Yeah, I'm trying to remember the name of it. I'll think of it here in a second. Maybe somebody in the den knows the Buffett company that is the big carpet seller. But the one thing that you generally are looking for in shorting one of these companies and finding it up here at the high is that it has broken kind of a trend. You really don't have a lot of volume out here yet so far. Below the 9-day moving average, so you could pull the trigger and you wouldn't want it to break back above that 9-day as long as you're looking at short. You were thinking about buying options?
Yeah, buying puts. I was looking at
which ones?
Well, in fact, I already bought some, but I bought the 90 puts.
You're probably on a pullback. That's exactly where it's going to pull back to. So that's, I don't know if you've done the math on it and how much money you can make off of them. Which ones, September's?
Yeah, I'm not that sophisticated to figure out how much to make. I just try and.
Yeah, the problem is that, I probably would have, at this time with the market turning over, if the premiums wasn't that high, probably I'd have to look at them, but I probably would have taken the 95s. But, you're probably going to go back, and that's exactly where it's going to hit. So I'd take my money on those things at 90. I just don't know if you're going to make what you want out of those options.
Yeah.
Normally you want to set up options with a better risk reward. And if I was just looking at the stock and I thought it was going to 90, then you've got to be on the opposite side of that for a better risk reward. Normally you want to have something where if it plays out exactly as you think, at least you're going to get 5-1 on your options, if not 10-1. So if you could have bought 100 options at $1, that probably would have been very good. And it went to 90, you would have made 10 times your money because you're just not going to win that many times on one-sided options. So you've got probably, if I had anything to say, would be that you need to look for opportunities where you can make 5 or 10-1 back if it goes to where you're looking at. Were you thinking about that 90 level?
Yeah, actually, to be honest, what I actually did was I did an income spread. I sold the letters about the 105s.
That's not bad. But I'm pretty sure, if I just looked at it, I instantly thought, hey, this thing's going to $90.
Yeah, I just wanted to stay under 100, right?
You're cool on that. Yeah, it's an okay play. You've got that high back, basically two, that make me think that that $90 range is right where you're going to want to pull the trigger. If you're getting out of that, basically you have two highs. The May 14th high at $90.92 and the June 17th high at $89.24. So it's probably going to get right in that area, and that's where it's probably going to find support at least for a while.
Yeah, okay. All righty, well, thanks. Appreciate
You bet.
what you do.
And just know that you're probably also going to have a bounce if there is any resolution in Syria. Probably figure 20 or 30 points on the S&P cash. But you've got, I think you've got to the 6th, no, not to the 16th. You've got a long expiration cycle in September. So you've got all the way into the 20th, which is one of the better things of options this month. Good enough. Thanks, Ron.
Okay, thanks. Thank you, Ben.
Bye. And let's see. What do we have out here? 134.66 on the S&P cash, 2.33 billion shares. So probably going to be waiting to see how this market closes. But it looks to me like if we did have a closeout here, we'll probably close below 1630, and if it got ugly, 1620. But maybe we'll see that 1620 come in tomorrow. I think we're probably going to find at least a modicum of support at that level. Let's see what else we have out here. We looked at CRE. Let's take a look at Diamond. I haven't looked at this for a while. Diamond's Foods. This is another one that gapped up very strongly to the previous high and had higher volume, and it's coming right back in and filling its gap. This thing was at $19 on August 20th, rocketed up to $23.38 on August 21st, and come right back down pretty much and filling that gap. And that's even when these things are blowing out previous highs on higher volume, we continue to see that as a pattern. Only a few of these stocks actually breaking out with higher volume and holding their highs, and that's got to be troublesome if you are a bull. See what else we have out here. DDXJ, the gold miners, another good chart to look at. Again, a very light volume. We're probably going to come into a lot of resistance in these miners right at this level. This is the result of a gap down. That gap down happened on April 15th with 3.3 million shares in the GDXJ, which is the gold miners Vectors Juniors. And of course, even when we came back and retested on April 24th, 1.9 million shares, that we've got 400,000 shares today, and kind of reversed off of that, probably a good indication that we have at least a fairly decent resistance level back in here. Now, if you go back and look at the retracements, if I turn that on, you're going to see, let me go back out here a little bit, you're going to see a nice confluence level. This thing went right to it today. And this is where confluence is really going to make you a lot of money. And you had it from, $55, got to $54.56. And that gap with high volume, too, along with confluence at that same level, a pretty good indication that you were going to get probably everything you got out of your trade for a little bit right there. Anyway, we've got a few moments left. Give me a call, 877-927-6648. That's 877-927-6648. We got plenty of time to get you in the last segment, or you can email me at path@tfnn.com, and I will check it during the break.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.
Join Andy Hecht as he teaches you how to make money in commodities. The Commodities Hour, next on TFNN.
Oh, boy. Just teasing me. I get 15 seconds of a great song, and what can you say? Did have someone, let me go ahead and pull this up just to see if I've got any. Did have a question yesterday, and I got the email too late, but they were talking about ANN, and kind of an interesting chart out here. But unfortunately, I got it too late. He sent it in plenty of time. I just got it too late in the news. But a very interesting chart. ANN is the symbol out here. Ann Taylor had a nice Gartley pattern, was one of the ones out of the art of the chart, or art of the timing the trade charts scan every night. And it pretty much got down to your target of 31.49, actually got down to 31.40. and started doing a little ABC up. You got up to the highs, pretty much on a Friday out here. And that's my comment was, or he wanted to know what I thought. And you had that huge volume and a huge kind of dragonfly doji out here. All that huge volume and a narrow top out here pretty much looked to me like an exhaustion move for this stock. And the other thing I would say is that if you've looked at any of these retail clothing stocks, none of them, a few of them have been doing good, but majority of them have been going up either 5% or down 15 or 20. And that continues to be a problem in a sector like that. So going to be problematic. In the last couple of minutes, let's just take a look and see what we have in the let's see what we have in the markets out here. We get a little bounce. We got down to a low of 1631.42 so far today in the S&P cash. We're at 1634.80, so a few points up over it. Down almost 22 points on the S&P cash, which is about 1.3% from yesterday. So one of the bigger moves down. Printing out 2.4 million shares. The volume the last, 20, 25 minutes has fallen off a great deal. Looks like they're going to try to do a little bit out here. But again, I just don't see a whole lot till 1620. There you're probably going to find some people sticking their necks out. And I don't think until you know that we are engaged in military actions, I don't think you want to be sticking your neck out here. And if you're short, I don't think you want to be overthinking it. I think you want to be sitting on your hands, and you want to have that order to buy just slightly higher than the current market, and be able to get that market in there when it starts moving higher. Not try to predict falling or finding the bottom out here, but reacting to when it does come, because these markets are just like paper cuts. They're waiting for something, and they will bleed and bleed and bleed, and it won't be heavy, it won't be hard, it'll just be continuous until we have some kind of resolutions on exactly what's going on in the market. But 1634, 2.4 billion shares on the consolidated New York Stock Exchange tape, and just for the most part, not a lot else that you want to be looking at. Probably the most important thing to me is that Apple has decided to crack and crack well. We brought this up at the beginning of the show, but to anything for a manipulated stock, it's always the most interesting to come out and see when those start to fail. And I think you probably have to make a fairly decent indication that we are seeing at least a decent pullback into the 465 area, I think, on Apple. We have filled the gap from the 14th. See you tomorrow.